Most investors believe the S&P 500 is the safest place for long-term growth. But what if I told you nearly half your money is now concentrated in just a few tech giants? Nvidia, Apple, Microsoft, and Amazon are quietly reshaping your entire portfolio. This shift has turned a diversified index into something that looks more like an AI-focused fund. Let's uncover how this transformation happened and what it means for your financial future. The illusion of safety. For decades, the S&P 500 has been seen as the gold standard of safe, diversified investing. Whether it's your 401k, your ETF, or your index fund, chances are, part of your savings sits right here. But here's what most people don't realize: this index isn't as balanced as it once was. Over the last few years, an incredible shift has taken place inside the S&P 500, and it's being driven by artificial intelligence. The power of 10. Just 10 companies now make up nearly 40% of the S&P 500's total value. That's right, 10 firms control almost half of your diversified investment. And those firms? They're all tech heavyweights. Apple, Microsoft, Nvidia, Amazon, Meta, and Alphabet lead the charge. Their stock performance alone determines whether your portfolio rises or falls. How AI took over. The AI revolution didn't just change technology, it redefined market leadership. Nvidia's stock, for instance, soared more than 200% in 2023 and another 170% in 2024, driven by explosive demand for AI chips. As its market value skyrocketed, its weight inside the S&P grew dramatically. That same story repeated with Microsoft, which integrated AI into its products, and with Amazon, using AI to power logistics and cloud services. This surge has quietly shifted the S&P from a broad-based index into something much more concentrated, an AI-powered growth fund in disguise. Understanding the math. The S&P 500 is built on a market cap-weighted model. That means the bigger a company's stock value, the greater its influence on the index. So when tech companies rise fast, they start dominating the whole index. If Nvidia adds $500 billion in market cap, the S&P itself moves noticeably, even if dozens of other companies stay flat or decline. In short, the S&P has become increasingly dependent on the success of AI and big tech. The risk of concentration. Concentration can amplify both profits and risks. When a handful of stocks drive an entire index, volatility increases. If AI stocks continue booming, investors win big, but if sentiment turns, the correction can be sharp. In 2022, for example, tech stocks fell nearly 30%, dragging the whole S&P down with them. So while diversification on paper still looks intact, the real risk exposure has shifted dramatically. The Buffett Rule Revisited. Warren Buffett famously advised, buy the S&P 500 and hold forever. But that advice was rooted in a time when no single industry dominated the index. Today, technology alone accounts for nearly 30%. The question for modern investors is, does that same passive strategy still hold? Or should we rethink what diversified investing really means in the AI era? Winners, losers, and the AI effect. AI has reshaped more than just tech. Companies that adopted early, from finance to healthcare, are seeing productivity spikes. But firms that lag behind risk being left out of the next decade's growth story. So this isn't just a stock trend, it's a structural transformation of the global economy. Smart diversification strategies. Financial experts now recommend mixing your exposure. That means balancing the S&P with small cap, value, or international funds, and using equal weight ETFs to reduce single sector dominance. Global diversification ensures you benefit from AI growth without being overexposed to it. Final thoughts: awareness is the real edge. The S&P 500 remains a powerful tool for building long-term wealth, but it's evolving fast. Understanding what's inside your portfolio is the key to making smarter decisions. In the AI era, awareness is your greatest financial advantage. Do you believe AI dominance makes the S&P 500 stronger, or more fragile? Share your thoughts in the comments. Let's see where smart investors stand. If this helped you see your investments in a new light, hit the like button. Subscribe to my channel and turn on the bell for more in-depth breakdowns every day. Smart money starts with smart knowledge.